at the moment, there are also quite a lot of the kind of a mixed message in the market. So what if the bottom is already here? Or what happened if we didn't really see the capitulation? Or what if this, what if that? So let's just go through this. So what if here's a market bottom, but that's without the capitulation. So let's just take a look at the analog. Okay, so this is really the analog from 2015-16. So if you remember that time, if you're trading, that's really a volatile period. So on the right hand side here is 2015-16, and on the left hand side is the current year. So you can see that there's a ton of the volatility involved in 2015-16, and I wouldn't say is very similar, but there is certainly some similar structure between 2015-16 compared to the current year. So let me walk you through. So first of all, prior to the collapse or selling climax at 1, okay, at 1, so that's 2015, we also got a topping formation here. So there's previously a distribution structure or topping formation in this year. So there's the similarity. And subsequently, after it breaks out from the structure, and then we see a selling climax. So there is a selling climax here as well. So 1, the selling climax. Subsequently, the automatic rally, that's at 2. So that's the AR. That's the AR. Okay, at 3 is just another test. So we got a ST, secondary test. So the secondary test as a lower low in this year. So there is some kind of the difference, but still is very much we have this sort of the trading range unfold. But from here on, this is like a localized accumulation structure. So from this is an accumulation range actually projected a targeted outcome, sort of like bumping up into a higher high at 4 here. So at least it's not straight off like a trading range, which we have the structure in this year. So this is pretty much just a trading range. So in 2015-16, we got a higher high at 4. But in this year, current year, we got a upthrust, so slightly higher than 2. So it's just create a temporary commitment. So it's an upthrust followed by just commitment below, and then that actually kickstart a very sharp sell-off. So from 4 to 5 is a sell-off. So from 4 to 5 here, we got a sell-off as well. But of course, there's a lot of the volatility involved here as well. Unlike the current year, this year is kind of a straightforward trend. So from 5 to 6, which is currently we are having right now. So if you think about 2015-16, when we have this sort of the localized accumulation structure and projected into this higher high at 4, but here we only sort of created an upthrust. So in terms of the structure, this is horizontal trading range, but this is kind of a W and then followed by a spike up. So there's a difference. So in terms of the strength, so in terms of the strength of the market structure, so this is stronger. So we got a stronger at 4. So this is kind of the weakness at 4. So when the market is actually going down, so we got a sell off here, reach 5. And this year, we also got a sell off, but actually break the support at 1 and 3. But comparing to 2015-16, it just barely tested 1. It's sort of like a spring, right? So this is a spring. But instead, this year is acted as a sign of weakness at 5. So this is actually a sign of weakness. So we got a weakness here because previously we have a weakness from 4. So I'm not surprised to get a weakness at 5 as a sign of weakness instead of a spring here in 2015-16. So I think this is pretty much the major difference. But still, from 2015-16, we have this big trading range unfolding. But from this year, current year, we just have a sign of weakness, but it sort of turned out to be that could become a spring, or maybe type 2 of a spring with an increasing of the supply, or you can even call it a shakeout. So whatever we want to call it, this is certainly a spring-like of the action. So it's just a temporary commitment because there's no follow through to the downside. So instead of seeing a capitulation to the downside, which I think we might be able to get it once we see this sell off here, and then if we see inability to rally, and then suddenly can just drop further, but it didn't really happen. So instead, what we have here is kind of a reversal or a short-term relief rally. So this is still a relief rally is unfolding. So we got a relief rally, but still this one slightly better than a relief rally. And I will just call this a change of character for the time being, because if we compare to the previous rally up, so maybe from here to here, from this one to here as well. So this is certainly the biggest up wave that we have ever seen. So it's a change. It's a change in progress. So something is changing. So certainly, I think that is the change of character out from this downtrend. So because this is definitely the largest upwave that we have ever seen out from this upwave, this one, or even this one. Okay, so if this current relief rally, or call it a change of character rally, is actually committed above this support line, or this is the axis line where the previous support turned a resistance. Now the resistance actually got broken and might become a support again. So that actually could change the structure from a sign of weakness to a complex spring or spring-like action, because they actually committed back. So based on the momentum of this current rally, I think if you look at Thursday, Friday, that's really strong momentum. So we got a strong rally up and actually committed above, and that comes without much volume. So I don't really see a lot of the volume. In fact, I see kind of a lower volume. I think that's sort of like the ease of movement to the upside, which I will explain shortly when we look at the chart in a trading view. So just bear with me with the analog here. So right now, we are kind of at 6 right here. So 6 is just committed above. So if you look at 2015-16, is probably somewhere around here where we have a kind of a spring followed by a test, and then eventually we just broke above. So it's just committed above the axis line here. So this is the axis line here. So if 2015-16 is of any good analog or reliable analog, so at least I think we sort of can expect the rally to continue to test maybe 43. So I think that should correspond to this axis line as well. So this is axis line. So it's sort of like halfway between the trading range. And this is, I think, quite an important area. Of course, before that, there is certainly some more levels, like maybe we got the selling climax low from here. And also maybe it could just bump into another smaller level here as well. But 43 is probably a right level, because that's where we see the previous breakdown happen. So if you look at the structure, so this is the topping formation. Here is a breakdown bar. Okay, so it actually broke this structure and then followed by a selling climax. So subsequently, we see that this rally actually tested the breakdown bar. So the breakdown area or the breakdown bars actually often get tested. So it's sort of like the SOP. So once you get broken, you get tested, just like a breakout. So you got a consolidation, then you breaking out, and then you come back to have a test. It's kind of like the textbook style. So where go back and come back to test the axis line where the previous resistance now turn a support. So similarly from the bearish side, so once the support get broken, so here, and it actually come back to test the previous breakdown bar. So this is actually one of the crucial area, because this is the breakdown bar, and then we have one test get rejected, and then last Friday we definitely see a commitment above. So that's actually got tested as well. So come back, break above. So what's the next level? The next level I would say is probably this as well, but we definitely see quite a lot of the choppy movement where actually get breakdown and then get retrace and then test again. So quite a lot of the testing involved in the area as well. So certainly I think this is the most important bar that you need to get tested, and it actually in line or coincides with this axis line. So I wouldn't be surprised if we see the rally just to continue to test 43. So 4300 is actually a very important level. If this is a big if this is a true market bottom. So first, it definitely need to overcome all the levels and then first tested the 43. So what happened if it tests a 43? So if we look at 2015-16, there is field of the reaction happen when you actually approach this axis line, so which is correspond to about 4300. So I think it makes sense to see this kind of the reaction. If it go back, if it really reach 4300, test it, show some reaction, shallow type of reaction before it just continue. So if this is a true market bottom, what's next? So it means that this is probably a phase C with a spring or deep spring or complex spring, and we need to see a side of strength rally in order to confirm that. So what would a side of strength rally be like? So we need to see this kind of the commitment to the upside, vibrant rally, big spread to the upside, and this is definitely the level up. And then probably we still have another level about 44, and then this is another axis again, sort of between, well, I would say 45, and eventually it needs to commit at around 46, or at least to test 46. So that is the really a key level, and after that is probably going to have a reaction. So that should coincide or maybe similar to this kind of the scenario. So you can see that this is like a side of strength rally followed by a pullback, a reaction, and then followed by quite a few of the tests. So it's very volatile here as well. So what happens if it fails? So I think 4300 is a very key level, important level that we need to see it to overcome or to show some form of the rejection. So if it fails, 43 is the right level for it to fail. So 4300, if it show big type of the rejection bar similar to this kind of the bearish bar with a spike of the supply, so increasing of the supply with big bearish bar, then I think we could probably anticipate another leg down, go back to test the swing low here. So that's another possibility for the failure as well. So if that's the case, I don't think we're out of wood yet. Means that this is simply a low. It's just a low, and that's just a change of character rally, and we can anticipate some kind of the trading range to unfold. So something like this, and we need to judge the direction bias at the later part of the stage. So it can still have the capitulation type of the movement. So for example, if it just still consolidate between say 4300 to about 3800, forming a trading range, and eventually if it shows some kind of the distribution characteristics, then I think we could still see it break down and have the final capitulation. So, or if it shows some kind of the accumulation type of the qualities or characteristics, then I think there is a chance for it to go up as well. Okay, so by then we still need more candles to unfold, and so if that's the trading range, my bias will still stick to the downside because of the previous bearish bias. Okay, so we got a background of the this sort of the sign of weakness, increasing of the supply, high volatility, big spread bar, acceleration to the downside. So all of these are just the characteristics of the bearish structure, distribution characteristics. So even if it forms a 4300 rejection, a trading range between 38 to 43, I will still stick to bearish bias until proven wrong. Okay, so we talk about like how can we anticipate if a true market bottom is here, then need to definitely come in above, test at 4600, followed by this sort of the shallow backing up process. And another important thing apart from the price action itself, and that's rely on this 15/16 market analog, it's actually market breadth. So if you look at or watch my past sessions, I think I explained market breadth in quite a number of my videos, because market breadth is one of the uh, key indicators or the leading indicators that I would like to refer to, and I monitor it quite closely. So you can definitely see from this chart here. So this is MMTH. You can find it in a trading view, and it's a percentage of stocks above the 200-day MA. I think it's pretty self-explanatory. So it means that it's just like there are how many percent of the stocks actually above the 200-day MA. So if you look at right now, it's only about 28% or 29% of the stocks that actually stay above 200-day MA. So it's that bearish. So can you imagine there's only less than 30% of stocks that actually stay above 200-day MA? So pretty much majority of the stocks are in a downtrend. So that's why it's actually below the 200-day MA. So if you look at the past, I actually probably refer it to 2015-16, which is here. So I highlighted here as well. So these are the two lows actually formed in 15 and 16. And we get this sort of the market breadth kind of very similar to 2015 and 16. So here, somewhere around 20 is just kind of touch. 20 is just probably within the 2015-16 zone of the market breadth as well. So I think it makes sense to actually use 2015 and 16 as an analog as well if you based on the market breadth. So apart from the market structure itself, and I think in terms of the market breadth, it didn't really went into this sort of the extreme selling. So this is definitely the capitulation I think I was anticipating. So this was the COVID low. So the capitulation to the downside, and also that's the capitulation to the downside in 2018 during the Christmas sell-off as well. So if you look at the price, I think it's very clear. There is a lot of the panic involved, very sharp movement going down, and then forming a selling climax. So that is definitely from a capitulation. So that's why I kind of exclude the scenario in the COVID low and also the 2018 sell off, because we didn't really get a capitulation to the downside, at least for now. So not yet. So instead, I just think probably 2015-16 analog would be similar in terms of the market breadth and in terms of the market structure, which I just showed you earlier on. And if you look at this market breadth, I think there's one key element, so which is the level. So if you look at this level, 30 and 40 is the resistance zone or the support zone, or you call it the axis zone as well. So you can use it as an axis line as well. It doesn't really matter. So if we focus on this is a 40% and there's a 30%, and once the market breadth actually break down below like 50% and then go into 40%, 30%, and it just show inability to rally back above 40, then it just form kind of in a danger zone. So like here, that's before the sell-off happened, the Christmas sell in 2018. So it just fall below 40 and show inability to rally up. It's just hang around here, fluctuate between 30, 40, and eventually it should just go all the way back and dip below. So that's the capitulation scenario. And similarly, if we look at 15, so 2015, 16, we definitely get this. So it just dip below 40, and then it's kind of have this sort of the selling climax, and it try to rally above. But look at the rally, it just shows some upthrust action. So that's temporary commitment. It just did not commit above 40, and eventually it just come back down and dip to probably that's 16, 15 as well. So that's the significance of the level. So 40% is quite significant at this point of the time. And if you look at this year, so this is 2022, okay, this year, we also see that is attempt to break 40 and then bounce back up. But once it's had a significant breakdown. So look at this. So there's a sharp sell-off in the market breadth, and subsequently it shows inability to rally, and there's another attempt to rally that is uptrust. So that rally actually, I think if I remember correctly, that should be in March. So that's the March rally. It just formed an uptrust, and eventually it still failed to come in above. So after that, it just kind of dip below and then break below 30, and eventually sort of entering into another oversold level. I call it the oversold level, not the capitulation level, because unlike 2018 and also 2020, it did not really go all the way back like 15 or 10. So that's sort of an extreme level. Instead, it's just kind of oversold, get to about 20. So that is very similar to 2015-16. So maybe not this, but probably the first leg down here. Okay, so it's kind of in between these two low here. So it's kind of in between here in this zone, and right now is just kind of attempt to rally up. Look at this, it's right at 28.7. So that's, I believe this is the close on Friday. It's still below 30. So if this is a true market bottom, which it could turn out to be, it could. So it still needs more development, more work to be done. And first, I really need to see a commitment above 40%, or maybe I would say first is 30%. So it definitely needs to commit above 30, 40, and eventually I want to see a right commitment above 40, and then probably eventually just stay above 40. It can probably fluctuate like this. So this is another example. I want to see something like this. It needs to actually commit above 40. Look at this. It just turned 40% into a support level. But it did not really turn out, go all the way back to 60, 70, or 80. It still kind of fluctuate between 40 to 50, forming a consolidation. That's in 2019. Okay. So definitely I want to see this. So that is the second criteria based on the market breadth. If we really get a market bottom here, means that May 20 or the low in May here is actually the market bottom, then it really need to come in above 40%. So that's from the market breadth perspective. Because for the perspective of the health in the market, we definitely need to have an uptrend that is actually sustainable and healthy. And I think we need at least 40-50% of the stocks actually participate the bull run. Means that I want to see a 40-50% of the stocks actually above the 200-day MA. So I think that is quite crucial. So that's based on the market breadth. All right, so that is pretty much what I would like to see in order to confirm if there is a market bottom here. I mean, it's really way too early to call a market bottom. This is by far at best for now is a bottom, because I see a change of character, and I think the rally is strong and it looks like it's quite decent. I don't really see any threatening price action yet. So right now, I think that we still have a chance for S&P 500 to go a bit higher. So first level is about 4,300. Okay, so back to the market outlook. I think that this is actually a good call in my Telegram group. So I think some of you might see the update. Not sure whether you took action. On the May 25th, I think things are getting very clear, or at least a lot clearer, when we have see the test bar on 24th of May. So it means that next day I actually updated. So if you look at this chart here, it's sort of seeing this test bar. So shortening of the downward thrust suggests a fading of the selling momentum. So we got a shortening of the thrust. Okay, so selling momentum is kind of fading. And yesterday was a successful test, a higher low with a decreasing of a supply. So that's definitely a successful test. I think this is quite a key, because once we see this, it should be clear that we should anticipate a rally in S&P. So short-term rally, expect a relief rally to test 4,000 to 41. Pretty much is this green line. So that's the supply zone. and downtrend is intact with capitulation to the downside after the relief rally. So that means I actually anticipate if we stall right here 41, if we see rejection tail or maybe some bullish, sorry, the bearish bar like this, bear spread, big spread to the downside, so something like this, big reversal, then it's probably going to fail and seeing the capitulation. But what are we getting? We didn't really see any failure. In fact, we get a two big bullish bar penetrate 4100. So this Thursday and Friday bars are very strong bar, strong momentum. So I think from here on, it just need to test the next level up. However, I think as I said before, we are not out of wood yet, because it still can just go all the way back to about 43, which is this line here, and then test it. So if we see some kind of rejection, and it could just turn into another trading range. So we need to see how it actually unfolds.